Michael, welcome. You're a little different from, I think, all the other money people who are speaking today in that you're actually a banker. You're not, it's not a fund. Can you explain what you do?
Sure. That's why I'm dressed this way with a tie and everything. But, well, Silicon Valley Bank, I think as William said, we're in banking, which is heavily regulated here in China. Nonetheless, I can just explain very quickly, introduce briefly Silicon Valley Bank. We have been established for 27 years, obviously in Silicon Valley. We have 27 offices across the United States, and we also are located in the UK, India, Israel, and China. All the places where we're located are essentially centers for technology development and innovation. We have, in the history of the bank, we've banked about 30,000 technology companies. We currently bank over 550 venture capital.
Could you explain exactly what that means, where you bank them? Sure. What do you do for them?
Well, we are exclusively focused on technology, life science companies. We now have a clean tech practices, and we also provide banking services to the VC and PE industry. So one big category of clients are the actual funds themselves. As I said, we bank about 550 venture capital and private equity funds. So we give them financial services, and then when they invest in portfolio companies, they introduce those companies to us, and we start providing banking services also to their companies that they invested in. So we are very good at understanding the entire process of a company going from early stage to growth to a more mature stage. And we have different products and different types of risk control to be able to lend effectively, even starting right after Series A has gone in. So when the company has no revenues, no cash flow, we're able to start lending to that company right from the start. Business in the world, you have to know what's going on in innovation in all the different countries. And that's the primary focus of SVB, and it's also becoming the primary focus of China. If you read all the literature, China is now going through a transformation of transforming from becoming the, well, it's already the leader in terms of manufacturing. It is the manufacturing center for the world. They're now trying to transform into a country that's known for innovation and technology and knowledge. So I like to think about it like, instead of the label made in China, they would now like to have the label invented in China. In fact, the State Council has said that by the year 2020, the developments in science and technology should account for over 60% of the country's growth. So innovation has now leapt to the forefront of China, and that's where we fit in. Second major development is the tremendous explosive growth of the VC and the PE industry. I'd say before the year 2000, there really was no venture capital or private equity industry in China at all. And it's really only been the last 5 years where you've seen a real takeoff in funds raised. I think between 2005 and 2009, over $26 billion of new funds have been raised in China, and more than half of that has already been invested. So when you pair the explosive growth of private equity and venture capital with the primary focus on innovation, you can see what that creates in terms of opportunity for SVB. The third major development is the need for financing these innovation companies. The government is now really emphasizing the promotion of financing SMEs, the small and medium enterprises, and also these innovation companies. And you have to look at the banking system in China. I've been here since 1993. And at that time, everyone was saying that the Chinese banking system was absolutely insolvent, that banks are going to go broke, the whole society was going to collapse. And the CBRC and the regulators have just done a fabulous job cleaning up the banking system. The average bad loan ratio across the entire industry in China is now less than 2%. And I think a lot of people don't have that knowledge. They still think it's up in the 10, 20% range. So they've done such a good job that the banks are only pretty much lending, doing sort of traditional banking methods, and by that I mean they're lending against fixed assets. If a company has a piece of land or a building and mortgage that piece of property to the bank can get an appraisal report. The appraisal report says that it's worth, let's say, 100 million RMB. They make a loan of 80 million, and they feel very secure and risk-free. Now the government is telling the domestic banks, you need to lend to these technology companies. These companies, they're small, they don't have much scale, they don't have a piece of land, they don't have a building, they have very smart people, they have a new technique or a new technology, but maybe it's not even fully developed yet. How do the domestic banks finance these companies? And we've had a lot of banks coming to us asking us for help, and we've been trying to do that. And so we just see a tremendous opportunity. If we could have the ability to provide the same banking services that we provide in the US here in China, we feel we could make a major contribution to achieve China's goal of transforming into an innovation country.
What's the obstacle to you doing that?
Well, the main obstacle is there are certain regulatory requirements that have to be fulfilled before you can apply for banking licenses, both in terms of time, asset size, and so forth and so on. The other thing is that there's also restrictions on the ability to start doing RMB business. For example, even if you're able to get a banking license, for example, if we did our own banking license or a joint venture banking license, you could only do foreign currency business for the first 3 years of operation. And then only after 3 years could you then apply to do RMB business. And if you're restricted just to foreign currency, there's a limitation as to how much banking you can actually do in China.
So if you don't get a banking license for China soon, what will you do?
Well, we currently are exploring all different alternatives. We're making loans offshore and then having the offshore entity, make loans into China. We are going through some of the local banks providing a guarantee and having the local banks make the loans in RMB to our clients. We are also exploring, there are all sorts of other vehicles like possibly purchasing or investing in an existing bank, or you could set up a debt fund, or you can set up what they call a village township bank, or you could set up a small loan company. There's a whole bunch of other alternatives. We're exploring all those. But the most effective way would be for us to have our own banking license to be able to do all the banking services that we currently do in the U.S.
I'd like to just get back to innovation a little bit. I mean, innovation requires many things. You're responsible for funding it if things work according to your plan. But there are other problems in China, widely cited problems such as the education system not encouraging innovation, intellectual property, rampant piracy not encouraging innovation, and even some other ones that many people aren't aware of, such as the fact that bankruptcy is a very unclear thing. There are bankruptcy laws in China, but it's very unclear how they get applied, and this leads to a lot of businesses, when they shut down, they just run away. The boss will just run away, get out of town. What do you think these obstacles, how much of a brake will they be on the government's plan to encourage innovation in China?
Well, I think that's the way China is. I think you have to, if you want to deal in this country, you have to figure out a way to navigate amongst all these different risks. That's why we usually do not go into a banking situation unless you already have some investors, because it's very difficult. I mean, I did high-tech lending to startup companies in the Boston area in the 80s, and I was in charge of a unit at Bank Boston that only lent to early-stage companies. They go through all sorts of cycles and problems. I mean, it's very difficult to take a company from nothing to a mature company. You run into, maybe it's not this month, but next month you run into a problem. You may find out that the strategy is not correct. You may find out that maybe the CEO has to be replaced. You may find out the investors, are struggling also to finance the next round. You have to deal with all these different issues, and that's why if If you're just a bank and you're the only source of capital, it's pretty tough. So we usually partner up with investors, and we have a very good understanding and relationship with investors. What we want to do, frankly, to really answer your question, we have 20 years of experience of doing this business. We think there's many parts of our experience that also apply to China, because all these companies, going from early stage to mature companies, all run into similar issues, frankly. People issues, money issues, strategy, so forth and so on. What we want to do is take our model, our experience, partner up with the regulators here, CBRC, partner up with local banks, investors, local governments, try to figure out, take our methodology and customize it to all these different variations in China, which is very unique, and then come up with the best practices and the most effective way in China to finance innovation. That's our goal. And we're very willing to contribute and to help China in that way, if we have the chance.
Michael, thank you very much.
Okay.
Wish you best of luck on your mission.
Thank you very much.